What's going on, guys? We are going to cover some price action from today. Now, markets are closed today, so perfect time and opportunity to do some back testing, to go ahead and kind of look at some setups that maybe potentially you could have taken today in the pre-market, maybe some setups that you can take tomorrow, next week, so forth and so forth. Now, again, this is one of my favorite entry strategies that I like to play on the 5-minute time frame. Inside of Evolution Traders, there's definitely different variations of how to scalp this, which we get into more detail on. But what I want to show you guys here is just a very simple way that you guys can use a 5-minute time frame. So what we are looking at here is my Thinkorswim platform. This is where I do all my charting. I do all of my executions for my prop firm trading on either TraderVate, with Apex, or with Top Step X on Top Step. Now, on the right hand side of the screen, we're looking at a 5-minute time frame. On the left hand side of the screen, we're looking at the 1-hour time frame. I always have these two split screens up anytime I'm trading because I always want to kind of see the bigger macro supply and demand. So based on where we're trading at on the 1-hour chart can definitely dictate where I'm choosing to elect to take trades or disengage trades because of sheer supply and demand on a bigger time frame. I never really want to take a long into supply on an hour chart, just like I never want to go short at demand on the 1-hour chart. So as long as things are kind of aligning with these two time frames, I will definitely take my scalps on the 5-minute time frame. What I'm going to show you guys here is the 20 play pivot. Now, what you are looking for on this, again, a lot of you guys already know it, but I want to show you guys how you got to start learning how to trust sitting in a little bit of drawdown and allowing the trade to work out for you. Okay, so if we notice the first play here, the first play is right here. Your entry is going to be over the pivot high, so it's over the reason why candle that closes above the 20 SMA. Now on my time frame, or on my chart here, the 20 SMA is the white line that you see on my screen. I do have a few other moving averages on here, the 200, the 50, the 5, and the 10. Okay, I like to use all of these as areas of take profit or areas of support. So in this particular case, depending on the amount of contracts that you're playing, your stop loss is always going to be a max pain below your reason why candle. So automatically you kind of need to decipher how much risk are you looking to put on any potential trade based on worst case scenario. You get into a trade and this thing backfires on you and just absolutely screams down against you. So with that being said, I'm looking at a 20-point candle here. So this is a 20-point candle. So the most I'm going to lose on this trade, if it does get away from me, is going to be 20 points. Now, here's where becoming a trader needs to prevail, right? Just because we have a max stop loss of 20 points does not mean that we're going to allow it to go against us 20 points before getting out of the trade if the trade is technically broken. What would be some indicators that the trade is technically broken? You wick into the position here and it closes below the 20 SMA. Technically, it's broken. If you get into a position here and let's say the 20 is floating a lot farther down, and let's say you close below the 5 or 10, you can use either of those as a trailing stop. You can use those as a gauge to kind of get out of the trade. In this particular situation, 7:45 Eastern today on the 9th of January, we get a 20 SMA pivot. Okay. Once this candle closes, you're looking for the next candle, preferably. Okay. The next candle to confirm the high of the previous 5-minute candle. Now, when we confirm, you're going to enter in on this candle before it closes. We're not going to wait for this candle to close and then enter here. We're going to enter on this candle as soon as we take out the high. Now, you're going to notice here on this candle that it wicks you into the position and immediately closes red. So at one point in time, you were in drawdown. Your entry price is over the pivot high. That's your reason why candle 21,306 is the entry. So we're looking to get in at 21,306. Now at one point in time, this pulled all the way back to 21,299. So there was a portion or a time in this trade on a 5-minute time frame that you were in drawdown about 6 points, 6.5 points. Automatically got to know that if you were trading one mini contract, you would have been down about $125, $135. Okay. If you're not comfortable with that kind of wiggle room, you need to get into trading those micros. 5 micros, you would have been down about 50, 60 bucks max. And then it kind of goes in your favor. Now, my take profit on these, I treat them as scalps. I'm going to do two things. If I've got an area of supply that I can try to target, I will try to get that position to run into that supply and sell as close as I can into that supply. Okay. The other way that I do it is I put a hard 5-point take profit on there. I play a little bit bigger size. I give myself a little bit more drawdown. Now, the drawdown that I'll be giving it is going to be the 5, 10, and 20-day moving average. So if we break and close below the 5, 10, and 20-day moving average, you know, technically I'm not going to lose 20 points, but I might be losing close to 10, 12, 13 points on this particular setup. Okay. This is what's called a dynamic stop loss, a dynamic strategy, because each and every single trade that you take is going to have a different outcome, obviously, and it's also going to have a different stop loss. It's going to have a different range of that candle depending on what time of day it is. So what you need to really focus on when you're playing this strategy is to definitely move that position size, meaning the number of contracts that you're playing, to fit the amount of drawdown that you want to have. So let's say, for example, someone wants to lose no more than $200 on this trade. Okay. Then from there, quick math in your head, how many contracts can I play that if worst case scenario happens, I don't lose any more than 200, and then you fire off the trade. In this particular case, yes, you were in 6 points worth of drawdown, but then it does go in your favor and you would have taken 5 points off this move. Now, if your entirety of the reason why candle is 20 points, and let's say you're looking for a little bit more than 5 points, let's say maybe you're playing 2 or 3 micro contracts, I would try to target as a TP1 half of that range. So if the range of the candle is 20 points, I want to try to get at least 10 points. Okay. If I can pick up at least 10 points on this move, great. I'll do one of two things. I'll exit out of the trade completely and be content and happy with what the market provided me, or I'll sell one contract, move my stop loss to break even, and try to stretch a 2R trade off that. That's it. Or depending on where my level of supply is at, which in this case is a 200 period moving average, I'll sell into that 200 period moving average. Now, there's definitely ways where you can continue to trail that stop loss up and try to catch more momentum. That is something that we do go over each and every single day in Evolution Traders on the live calls, as well as the video course lessons that we have in there as well. Now, the next trade setup is a short position, and that position was formed, gave you a reason why candle at 8:55 Eastern time. So if you want to back test that, go to 8:55 Eastern time. Now, the range of this candle is 24 points. So automatically, you know, if worst case happens, I'm going to lose 24 points on this trade. Okay. So from there, we need to do the math. If I trade 1 micro, I'm going to lose around $50 on this trade. If I trade 2 micros, I'm going to lose around $100 on this trade. So if you're comfortable with, let's say, a $200 stop loss, you would trade 4 micro contracts. Okay. If you're not comfortable with closer to a $300-400 loss, you should not be trading mini contracts. One mini contract is going to be about a $400, $450 loss on this one particular trade. Now, again, we never really want to let it hit our complete stop loss. It's just there for a max pain protection. You can definitely get out of that trade a little easier for a lot less damage if we do close back over the 20 period moving average, or we close over either the 5 or the 10-day moving average. The choice is yours. Use those other 2 moving averages as trailing stops, as gauges. Now, you're going to get into this trade on the following candle once we confirm the low. So once we take out the low wick, this is your entry candle here. So this red candle is where you're going to be entering. You're going to be entering when, boom, we take out that previous wick low. Okay. So again, same rules apply. If the reason why candle is 24 points, I want to get at least 10 to 12 points if I'm trading micros. Okay, that's my target. Again, things can change. It can quickly reverse against you. You got to be able to manage your position. That's what being a trader is all about. The other way that I take this trade is I'll take it with a little bit more size. Let's say 1 or 2 mini contracts. I'll look for a quick 5 points. So if I can get into this move below my reason why wick, below the pivot, I want to pick up 5 points on 1 or 2 micros. It's going to be a very quick $100 or $200 trade. And then we just keep the show on the road. Now, there's another setup on this chart. Again, those of you guys who are already inside of Evolution Traders, you guys are going to see it clear as day. I'm going to tell you it's going to be in this range. And there's something very specific that we're looking for on that candle to catch a trade. You guys know what I'm talking about. If you don't know what I'm talking about, maybe it's time that you guys kind of join into a community, you know, get access to more education, trade with other traders who are doing this on a day in and day out basis, so you guys can start to add more tools to your belt. You can get all that information down in the description box below. Also, if you guys need Apex evaluations, use code DAnthony. That link is also down in the description box below. Make sure to like, comment, subscribe. Let me know how you guys like the new layout, the new chart layout here. I'm going to be doing a lot more streaming on YouTube as well as in my Discord. Automatically every single day, we'll kind of go over some key levels and some key pivots to kind of start the New York session. And then once the market kind of settles in a little bit, I will jump on that live call with those gold members each and every single day. We're also doing something very exciting. We're adding a new trader to the team at Evolution Traders. They're going to be kind of running the pre-market session, screen sharing, live trading, doing all that stuff. But for scalpers, for extreme scalpers, people who like to get down and dirty into that 1 minute time frame and take those very, very quick gains. So each and every single morning, you guys will be able to tune into that if you are a gold member. So make sure to hop in the room. So with all of that housekeeping being taken care of, hopefully you guys have a blessed day. Again, prayers and blessings to everyone in the Los Angeles, Pacific Palisades, Malibu area. That's about 15 minutes away from where I live, so we can definitely smell the smoke. We can definitely feel the winds. Fortunately, the fires haven't made their way down my way. I'm a little bit more south along the coast than where they're at. It's about 15 minutes away from me, but it's absolutely brutal. It's absolutely, you know, it's sad to see what's actually going down over there. So again, prayers to all of those people, families, and everyone who has been affected by that. So with that being said, make sure to smash the like button for that, and I will see all of you guys on the next video.